Good morning, and thanks so much for tuning in. This is Stocks to Watch on BloombergQuint, and I'm Mathew. This is going to be a tough session to call. The SGX Nifty, as of now, indicating quite the positive start for the Indian markets, especially after yesterday's whopper of a session. Let's see how that plays out. In the meanwhile, let's talk about some of the stocks that could be active in trade today. My guest is Mayuresh Joshi of William O'Neill. Thanks so much for joining me, Mayuresh. And I love the tie because we were talking just a few minutes back, and it could just indicate that the markets are still in the pink of health, like you just said. Let's hope that is the case. But before we get into the two sectoral indices that I want to talk about, let's talk about the one stock that I've identified, which is Tata Motors. It corrected quite sharply yesterday, 9%. The update that we have to talk about is the fact that they plan to increase prices of commercial vehicles from January of 2021 on account of input costs. But I also want to ask you about Tata Motors in the context of their Jaguar Land Rover business. After all, this new mutation of the COVID-19 virus, front and center is in the United Kingdom, where they are based. Of course, that is a big market for them. It's not the largest market necessarily, but it is a significant market. And Europe also is waving red flags at this point with regard to that mutation. How significant is this? And therefore, how would you trade Tata Motors?
Morning, Alex. Thanks for having me on your show. Yeah, so the tie is signifying that we are still trying to be in the pink of health individually and from an economic perspective. Coming to Tata Motors, you're absolutely right. I think what the virus strain and the mutation thereof has created, not just for the UK markets, but for the European markets as well, a lot of travel bans being imposed. And largely, again, I think the next few weeks are going to be extremely critical. How is it spreading? What is the impact? Because what probably Tata Motors did since the initial lockdown was announced in the months from April till the larger part of May, June, and as the economy started coming off out of it, there was a sense of resilience in terms of volumes coming back, demand coming back. The Chinese market, which is one of the biggest markets for Tata Motors, demand is holding out very, very strongly. But if the European market's gone the back foot because of this news, and again, the added pressures that probably come through related to this, it can just put a spanner in the wheel in terms of muted earnings growth expected in the next couple of quarters, and therefore resetting and recalibrating how the annualized earnings will then get adjusted over the next few quarters. North American markets holding up as well. On the Indian context, as you rightly pointed out, because of the rise in input costs, the prices have increased. But again, I think the kind of selling that we witnessed yesterday, the sentiments which have turned a little bit sour at this point of time, the exposure that they've got, I think the reversal that you're rightly pointing out on the chart right now, I think the crucial support levels of 150, 155 for Tata Motors are extremely critical to hold out. So I think wait and watch would be the appropriate strategy in my opinion. Let's see how this entire progress turns out to be in the next few weeks. If it holds out those support levels, I think there might be buying opportunities which come. But at this point of time, I think the price strength is coming out and the EPS rating is coming as per the ONE.
Okay, now speaking about support levels, in fact, there are a few that are suggesting, Mayuresh, that this might just be a good idea, or it might be a good idea at this stage to focus on defensives, which is why I've chosen both the Nifty Pharma pack and the Nifty I.T pack to talk to you about. Let's start, in fact, with which have I chosen? The Nifty I.T pack. It's an index that has gained about 46% despite the correction that you saw in yesterday's trade. It is the interesting pack to play because there are quite a few interesting names there that are doing quite well for themselves. In fact, in the very recent past also, you saw quite a few of these names run up quite significantly. Is there going to be increased focus on these? Let's talk about the Nifty I.T first. And which names would you recommend that retail investors look at very closely at this point?
No, absolutely, Alex. I think ever since the pandemic has broken off, I think the kind of numbers that IT companies have posted, even during the lockdown phase in Q1, Q2, and the transition that they've probably done in terms of the flexibility of work from home, the ability to service clients sitting out of remote locations, and the need that has now been felt in terms of adaptation and adaption, both in terms of systems and processes. I think a lot more order wins and order flows will start coming through for IT companies. Now, for outsourcers like us, I think kind of commentaries that have come through in terms of revenue growth, both in dollar and constant currency terms, are expected to be in very, very good digits. So I think higher double digits in constant currency on an annualized basis, higher single digits or even double digits in dollar revenue terms as well. The optimization part, because travel has probably not happened over the last few months, and because of the cost optimization at the company end, EBIT margins have also improved and are expected to remain at higher levels. Now, this quarter might have elements of wage hikes. You might have furloughs because of Christmas holidays, but the larger picture still remains intact in terms of more order coming in, good margin orders, optimization at that part, which means EBIT margin should get maintained, cash flows remaining strong, which means very, very good dividend payouts as well. So the IT sector should remain in focus. Again, as per our O'Neill methodology, I think we focus on leaders, and that is where I think the entire focus also should be. I think stocks like Tech Mahindra, HCL Tech remain on our buy checklist, primarily because of the flows that can come through communications, enterprise for Tech Mahindra, IMS, BFSI, retail order wins expected on HCL Tech, and even the mid-cap IT pack, Alex. So I think, the pack probably looks very, very interesting. A couple of these leaders are there on our buy watch list as well.
Now, I'm using the next group of stocks very broadly, and you're welcome to expand beyond the Nifty Pharma per se, because really a lot of people, when they're talking about pharma nowadays, Mayuresh, they're talking about the broader healthcare space as well, right? So, of course, this is an interesting play, and really in the context of this new strain, people are saying the vaccines that have been developed are still, it's not proven that they don't work. So we'll find out in the next few days. Hopefully they are still effective against this new strain. But in the pharma pack and in the broader healthcare pack, which stocks would you prefer? And do you think that they're again going to be in focus in the next couple of weeks?
Oh, no two ways about it, Alex, right? So I think when volatility comes back, IT, pharma, FMCG come to the fore. Now within the pharma space, again, we have discussed this a lot of times. I think a lot of issues which happened in the last 3 years, those issues are slowly and steadily getting off. So pricing pressures that they witnessed with the specialty pipeline that they have developed, FDA's, US FDA clearing a lot of their plants, which means the kind of efficacy that one expects from new launches and the top line growth should be there. Clean balance sheets for most pharma companies, very little leverage, and good dividend payouts as well. So having said that, I think within this entire basket itself, I can break it down actually to 4 subsegments. Core pharma companies, you've got hospital stocks, you've got diagnostic stocks, and a corollary play can also be insurance companies as well. With the pandemic, I think what has probably happened as a direct beneficiary for pharma companies in terms of creating vaccines and supplying them as well, I think hospital stocks might again come back into focus in the next few quarters, because a lot of the surgeries which have been opted out for, as they start coming back to the fore, I think the utilization levels and the revenue per operating bed should start improving. A diagnostic place can be a momentum play because of the surge that we've seen in cases across Europe, and the need for testing, I think that has increased greatly even locally as well. And the fourth will be an indirect play in terms of greater need for having your insurance needs getting adequately provided for, because I think that need has come back to the surface in terms of having a good policy, whether it's a protection plan or whether you probably get a term plan. But having some plans has become very, very necessary as well, highly underpenetrated. And therefore, I think this is one sector that can also be looked at. So I think it's a broader basket.
A few names though?
Yeah, so I think we are still holding on, right? Within the pharma basket, 2 names like Reddy's as an example, where the growth on PSAI in terms of biosimilars, in terms of their NDA pipeline looks extremely strong. Hospital space, I think very few listed stocks, but Apollo has very good moves. Anybody holding on can definitely hold on. There can be momentum plays in these diagnostic players, and within the life insurance players, I think again, only 3 listed companies. But I think there is sufficient amount of growth prospects over the next few years for this space as well.
Absolute pleasure as always, Mayuresh. Thanks so much for joining me today, and let's hope for the best in today's session. To you, dear viewer, thanks so much for tuning in. Do stay tuned. Lots more coming up in just a short while. This is BloombergQuint.